Well, there's the quarter-point rate cut, and then there's NVIDIA. There's Jay Powell, and then there's Jensen Huang. There's endless hand-wringing about inflation and job growth. And then there's a company with an outrageously high 73% gross margin and hundreds of billions of dollars in opportunity. I'm talking about the extreme dichotomy between focusing on a body of wizened economists who are being pushed around by a president who wants to run the central bank and focusing on the freewheeling capitalism of the semiconductor business with some bizarre federal intrusions in the age of artificial intelligence. That dichotomy plays out every day around here, including this one with Dow advanced 124 points, S&P gained 0.48%, NASDAQ jumped 0.94%. And you know why? It's because a huge percentage of the money that's invested in stocks sits in index funds, which have a tight correlation not with the companies themselves, but with the bond market. When interest rates go up, the indices tend to go down. Makes sense. Higher long-term interest rates are typically bad for business. When rates go down, the index funds tend to go up for the same reason, because almost everybody benefits from lower borrowing costs. So the linkage, it's ironclad. Sure, periodically the stock market can break free from the shackles of rates, but not very often. Yet that's the only investment most people say you're capable of owning. But when we're talking individual stocks, which I think you're capable of owning, there are plenty that are independent of anything the Fed might do. There's so much money parked in index funds that sometimes we forget that those indices are made up of individual stocks. The indices certainly weren't created for the stock of NVIDIA, though. A company with a $4 trillion market cap that's not at all hostage to interest rates. In fact, it's not even hostage to its own industry, as we saw today.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.